Siddharth Khemka as well joining another show right now. Siddharth, hi afternoon. As we are hitting that record high on the Nifty Bank, it's scaled that 49,000 mark. Tell me, where within banks do you still find value at the table, on the table where one can, look to add positions perhaps?
Yeah, very good afternoon. See, if you look at the overall banking space, I think the private banks and NBFCs are something that we believe would be driving the earnings in this quarter, because so far we have seen the PSU banks which have been seeing the high growth and on a high base, while growth might moderate, and we have already seen the NIMs kind of moderating and now consolidating. So overall, I think there will be select few pockets within the overall banking space. Some of the private sector banks, the good part is they have underperformed so far, and valuations are comfortable compared to some of the PSU banks, and that is where market interest is coming up in the current environment, given that large caps are still kind of languishing behind in the run up and in terms of valuation. So I think ICICI Bank, IndusInd, and Axis from the private banking space would be our preferred pecking order from the private banking space.
Okay, so that's the latest as far as which banking sector stocks you can still bet on. Kush Bora is also joining us on the show. Kush, what about the Nifty itself? That too is just at the edge of that all-time high level, maybe 20-25 points away. What's the next level to watch out for that as well? Because as Kunal pointed out, it is the day of weekly options expiry, and the next 45 minutes, 50 minutes are going to be fairly volatile.
Oh, absolutely. First off, thank you for having me on the show. But my concern is that while we are in an uptrend, we are not seeing the kind of momentum that one would have liked, especially once you're touching new highs. So I would have an approach on Nifty, which is fairly buy on dip. I will not chase the momentum. So through the day you get a gap up opening, it's best to perhaps wait for a dip, 50, 100 points, kind of a dip, and then buy. That strategy has actually worked quite well yesterday and today also. So that's the kind of approach that we'll have. For the month of April, we had two targets internally of 22,500 and 22,800, something that we had shared with our clients as well. The second target is also practically there. I mean, we hit 22,768 kind of a high, so it's almost there. We're looking at a 23,000 kind of a level now. But as I said, somehow, I'm not getting comfort to go out and chase this momentum. I would perhaps still be inclined to buy on any kind of, a slip towards 22,600 to 22,500 zone will also be a good buy. But even on an intraday basis, I would perhaps buy the dip.
Okay, point taken. Take a look at ITC. That stock is up 2%. SBI is suddenly showing big move as well. 2% gain there. Kotak Mahindra Bank has been with that 2%, has been sitting at 2% gain for quite a while, but SBI is the big one in the last few minutes that has actually moved up. And Reliance too is batting for the Bulls right now. 1% gain coming in. Of course, yesterday that stock was under pressure, so maybe a bit of a catch up there. HDFC Bank continues to languish, so there's a 1% cut there. Maruti are some of the other names. The other pocket which was showing signs of recovery was the entire chemical space. Jubilant and Grevia, Fluorine for that matter, other names as well from that entire pack were fairly active. What's your sense, Siddharth, on the chemical space? Because we spoke with an analyst and we'll play out the bite shortly, but the consensus seems to be building up that the worst is behind for the chemical sector, and now there should be a swift uptick both in terms of the export recovery and the import substitution demand coming in.
It looks like that the worst is behind, and with Brent crude price now kind of stabilizing on a Q-on-Q basis, margins should also start seeing that reflection. Demand is expected to recover, though not that fast to see a sharp uptick in terms of overall business growth. But with Europe and China started some signs of stabilization, I think on a market outlook, things are looking better for the specialty chemical. But if you look at our estimates for this quarter, the Q4 gone by, we are expecting for the overall aggregate specialty chemicals a sales decline of 9%, EBITDA contraction of 25%, and PAT decline of 38%. But I think this earnings that we are talking about is already there in the price, and the sector has kind of performed. It will take 1 or 2 more quarters, I think, for the numbers to start stabilizing and start seeing some improvement. But as we again speak, valuations are comfortable, market have run up, and in this environment, I think a lot of investors are looking at the longer term picture and the valuation comfort, which is there in some of the large specialty names, be it Deepak Nitrite, be it SRF, and some of the other names like Surf and Kems, which we like a lot, given that they are all doing capacity expansion over the next few years, which will drive growth in FY25 and FY26.
Right. In fact, since we're on the subject of chemicals, also hear it out from Rohan Gupta from Nuvama as to what his thoughts on the chemical rebound or possible chemical rebound is.
If you ask that is anything significantly has changed for the sector, we say no. But yes, few things are definitely positive for the sector. Like we understand that the earnings have bottomed out in Q3, and from Q4 onward, we should be seeing a sequential recovery in earnings for across the specialty chemical basket. Maybe a couple of names here and there, but otherwise across the sector, we see that the earnings have bottomed. But now it looks like the headwinds are over now, and we should be seeing the sequential recovery in place, while the structural driver already in place. So we see that the sector is definitely going to drive at least 20% plus kind of earnings growth in future for longer period of time. Picks right now, I will be positive on like Aarti, Jubilant Ingrevia, Galaxy Surfactants, Gujarat Fluoro. Some of these names we see that are going to be the beneficiary.
Back with closing trades, right? Now let's just mark what the closing trades are looking at currently, considering Nifty Bank is at a new record and both the Nifty as well as the Sensex is robust. UPL, that's the one which is on a tear right now. Almost 4% bump up is what it's seeing, along with the rest of the chemical players as well, which are holding up like we just flagged off earlier before the break. They're looking good, about a 3% move coming in there. Kotak is mighty strong, 2% of a move coming in there, and metals as well continue their uptake. So yesterday was Hindustan Copper, Hindalco. Today also you're seeing a smart follow through on Hindalco, which is holding up about 1.5% as we speak. What is L&T up to? That's a bit of a laggard. It's down about 0.7%, and Reliance as well will just come up for your screens. Let's see what that stock is up to, because HDFC Bank 2 is the red, Reliance holding out almost 1% right now in trade. Maruti, that's also a rank underperformer, down 2.25%. That, along with Bajaj Finance as well, is not doing a whole lot. But soon it's going to be all about IT, with TCS slated to come out with its numbers on Friday itself. Siddharth, what's the expectation there?
The overall IT, I think things are kind of stabilizing in terms of overall numbers. But if you look at the overall outlook, uncertain macroeconomic outlook continues to dampen the environment for IT services in Q4. While the sequential revenue growth could see some improvement because of the Q3 of a low base of a Q3. As we all know, Q3 is seasonally a low quarter. The Y-on-Y growth would remain, and we believe that the sector should report a weakest annual growth rate of 4.5, about 5% for the year, which would be the weakest since the financial crisis of 2008-2009. And demand improvement in FY25 only factored in towards the later half of the year, based on what the management commentary suggests. So only once US Fed starts cutting rate, I think the yields would also ease off, and the spending from the corporates would start improving, and that is when the demand outlook would look better. In terms of tier 1 IT companies, we are expecting sequentially to improve on a base, but again, the overall growth rate will remain below the historical range. TCS is expected to outperform in the tier 1 with a 2.2% Q on Q constant currency growth, while Nifty and Wipro would report a flattish kind of a number.
Point taken. The other, pocket which is fairly excited today is the energy name. So BPCL is high by 3% as we flagged out. Add to that list, Petronet has been running away quite strongly, 6% more. Hindustan Petro is up a good 6%. Kush, what's your take within this pack? What is the chart that looks the strongest? Which is that one?
Well, interestingly, a lot of these names had shown promise, but then, they fizzled out. Now we're seeing some sort of a Volatility and some of these names are starting to do well. So I do have IOC, BPCL, these on my radar for sure, and I'm at least looking for a break on BPCL. IOC looks strong, but the other name that you mentioned, that's a very clear runaway winner is Petronet LNG. There was a resistance of that 290, 295 kind of today with volume. The stock's actually broken out and sustaining. So I think good days to come for this stock. I think 320 is the next level one should watch for. So for me in this space, Petronet is a clear runaway winner.
What's the trend for metals? I mean, yesterday it was a Hindalco along with, I think, a Hindustan Copper, which has been in an uptrend, and you've also recommended that stock. Today seems to be NMDC and Vedanta.
Yeah, it's a sector churn, and this classically happens when a strong sector, uptrend is in motion. Because typically, what happens is there are few stocks which get identified as leaders, the ones which move up higher. There is a significant buffer or margin of profit which these stocks they generally tend to deliver in terms of the trading gains, and then post that once these stocks are at a higher range, that's where the laggards they tend to move up higher, or the underperforming stocks rather they tend to move up higher. For example, in the last couple of days, you've seen the likes of Vedanta moving up from, I think, 300, 310 levels now, 360 plus mark. Tata Steel has been looking attractive over the recent or over the very short term. But the likes of JSPA, Hindustan Copper, these stocks have taken a bit of a pause for themselves. So I think it's a classic rotation at play. This also indicates that the move is not at a fatigue for these metal stocks. But when you see a classic sector rotation, this means that there's a bigger trend at play for the entire sector, which means I think who have probably missed out earlier on the likes of Hindustan Copper, Hindalco, etc. They could use these marginal bits of correction. So, for example, if there's a 10% rise in these stocks already, then a 3% to 5% kind of a dip into these stocks should be taken as a good buying opportunity.
Okay, point taken. So that's the view coming in. Metal undergoing that churn within the entire pack itself. But specific reasons as to why NMDC and Vedanta are buzzing today, that's something Ashisha is joining us to talk to us more about that. Ashisha?
Let's talk about NMDC. The stock is up nearly 4 to 6% in today's trading sessions. One of the reasons, of course, is that analysts believe that iron ore prices have now perhaps bottomed out. Remember, iron ore prices were trading at that $140 per ton in January this year. They fell below $100 per ton in April, and now analysts believe that iron ore prices have bottomed out. Good manufacturing and macro data from across the globe, not only China but developed and emerging markets, is also aiding the rally in commodity prices globally, and that is why Indian metal stocks have also been soaring in trade of late. Remember, NMDC is a pure iron ore play after the demerger with NMDC Steel, and very many positive factors. The balance sheet is very strong. Analysts expect volume CAGR of about 8% over the period FY24 to 27, and EBITDA CAGR of about 10%. Dividend yield, it generates dividend yield of about 4%. So very positive parameters across the board. One of the important factors being bottoming out of iron ore prices. That is why NMDC is gaining in trade today. Apart from that, let's also talk about Vedanta, because CLSA has gone ahead and upgraded the counter to buy versus their earlier reduced rating. They've also hiked that price to about 390 from their earlier target price of 260, where they believe growth and margin expansion capex will lead to earnings growth going forward. Their corporate structure and leverage will be key monitorables, but they've gone ahead and hiked their EBITDA estimates by 4 to 13% over the period FY24 to 26. On the back of very positive upgrade that has come in from CLSA on Vedanta, we are seeing that bump up on this counter as well.
Oh yeah, absolutely. Good going for the metals space as we speak right now, after iron ore prices, it seems, have likely bottomed out. But Siddharth, what's your own take on not just metals but the entire commodity basket, be it gold, silver, cocoa? Many of these commodities are sitting at all-time highs, if not fresh highs.
Yes, I think if you look at the overall commodities pack, while some of the commodities are still reeling under pressure, for example, the domestic RC prices have kind of declined 5% on a Q-on-Q basis in Q4. The rebar prices, CRC prices are all kind of down. But on the other hand, we have seen some of the precious metals like gold, silver, and industrial commodities like copper prices kind of seeing a sharp improvement. There is some expectation of improvement in demand from China after this large stimulus that the government announced there last month, and plus some stabilization in the US and Europe. Plus the expected the commentary from the US Fed that there could be 3 rate cuts this year. That kind of also supported some growth expectations for some of the commodities sector. In terms of earnings, I think Q4 will be a lackluster quarter, but again, another sector where the stock prices are kind of already factoring in the weak Q4 numbers. The hope is that from here things would start improving on a sequential basis. Plus the valuation and some of the specific commodities like copper, silver, and especially on the aluminum side, I think things are improving. So we kind of like select few stocks within the space. Hindalco is our preferred pick within the space, followed by a Coal India, which is generally also providing a lot of inputs to the power sector, where we are seeing a lot of demand. And within the ferrous space, we like Jindal Steel and Power.
That was about the metal sector stocks that you like at this point of time. But shifting focus to some of the other names, pull up the chart of SBFC Finance. That small stock is showing a bit of a move as well. And Jubilant Ingrevia, of course, has been doing quite well. It's a 12% surge there. In fact, Kush, what's your take on the chemical basket as a whole? I mean, a lot of those names, right from a Naveen Fluorine to a Atul Limited to, of course, this Jubilant Ingrevia buzzing. What is your top recommendation?
Well, a couple of stocks on our, while the sector did have a lot of promise, early on, only now is, is starting to catch steam. So what we have on our radar is Aarti Industries. That is one stock, that we like from a momentum perspective. Very clear breakout, very clear runaway. The stock that 800 kind of a move, and about 700 to 710 is a good support zone. So Aarti Industries is something that I have on my radar. Now, one dark horse, and it's not a recommendation just yet, but I'm watching it for another couple of days, sort of an up move, is UPL. It's been a underperformer, but the kind of pace that we've seen and the sector tailwind coming in, there is a possibility that this stock could also move a little higher. But just now, I'll hold back on recommending. It's just something that I've got on my radar. But Aarti Industries has been and will continue to remain one of our top picks in this space.
Okay, point taken. Siddharth, this is a question we've been posing a whole host of experts as well. So thought I'll take your view as well. Sensex, when do you see that hitting 1 lakh mark? Because we're already past, 75,000. We are scaling franchise, whether it's Nifty mid-cap, going through that 50,000 mark, Bank Nifty hitting 49,000. When do we hit that 1 lakh mark on the Sensex, per your understanding?
So, Anisha, if you look at the earnings expectation, FY24, we saw a robust earnings growth of 20%. But on a high base and with margins kind of consolidated, we are expecting at least 15 to 18% growth rate in the Nifty earnings over the next few years. So I think that's the kind of compounding in the market we could see. Nifty is trading at a PE of 1 year forward PE of about 20 times, which is closer to its long-term average of about 18.5, 19 times. So I think re-rating only if the earnings growth again accelerate above 50% and an earnings growth of 15 to 18%, we should reach that mark, I think, in another 3 years' time.
3 years, that's the time Sensex will hit 1 lakh mark. But Siddharth, on that note, we let you go. Thanks so much for making time and speaking with us today. But as we slip into this very...
If you like this video, then like, share and subscribe to ET Now.